Good morning, everyone, and welcome. I'm Mike Alexander, Executive Director of the Low Speed Vehicle Dealer Association, and on behalf of LSVDA and the National Powersport Auctions, thank you for joining us. This is the first ever joint webinar between NPA and LSVDA, and we intentionally opened it up to the entire industry, dealers, suppliers, OEMs, and partners, because the used golf car market sits at the intersection of all of you. Based on registrations and early engagement, it's clear people here are here for a few reasons. Dealers, they want confidence around used car pricing and inventory turns. OEMs want a better read on dealer behavior and overall channel health. And suppliers and partners want to understand where to invest and where to spend and where dealers are actually heading. Our goal today is to be transparent, practical, and grounded in reality, so everyone leaves with fewer assumptions and better clarity. When we promoted today's session, we made a clear promise: actionable insights, smarter valuation approaches, and real dealer strategies for 2026. And that's exactly what today is designed to deliver. So let me transition here to our panelists. We're joined by three industry leaders. Tony Altieri is NPA's VP of Business Development, the largest remarketer and provider in the power sports and specialty vehicle area. In his role, he leads strategic partnerships and industry growth initiatives. With 16 years of experience in valuation trends, market analytics, and dealer operations, Tony is recognized as one of the industry's most trusted voices on used vehicle dynamics. Next, let me introduce to you Mr. Brian Rott, the CEO of Cartmart, a nationally recognized retailer and service provider with one of the largest and most sophisticated golf car and LSV operations in the country. Brian has been in the business for 38 years, and under his leadership, Cartmart has expanded across multiple states, countries, and earning a reputation for innovation, customer experience, and fleet management expertise. And last and certainly not least is Ben King, the VP of Metro Golf Cars. Metro is a leading dealership known for its disciplined appraisal processes, high quality refurbishment programs, and strong OEM relationships. With 28 years under his belt, operational experience is the king. Ben brings practical experience in inventory strategy, used car profitability, and dealership performance optimization. Gentlemen, thank you for taking the time to be with us today. And just a short bit about me. I grew up in the industry, fortunate enough to be working for the icons, the leaders that created this industry. Names like Billy Dolan, George Inman, Sam Mays, Bill Wooten, Carl Swanson, and L.T. Walden. First employed by EasyGo and fortunate enough to be employee number 83 at Club Car. Yes, I was only 17 at the time with a work permit. Club Car then had a 3% market share and was $9 million a year in revenue. Can you believe it? My, have the times changed. We'll start with a quick poll to understand who's in a room. And then Tony will walk through the state of the pre-owned market, followed by discussion and Q&A. Can you bring up the poll, please? Okay, let's move forward. Great, and thank you. So what I'm seeing is the emails worked pretty well, and we've got some pretty good membership participation, mostly dealers, franchise dealers, good a bit of manufacturing representation here. That's awesome. And the golf cars purchased annually, we've got a pretty good spread from 0 to 50 to 250 or more. Okay, perfect. So that kind of frames it for us, guys, and hopefully that will help me with the questions and help you. So with that context, let's jump in. Tony has pulled together a clear, data-driven look at how the pre-owned golf car market worked before COVID, how it was disrupted, and what the reset looks like heading into 2026. Tony, I've seen the work. Thank you very much for putting this together. The floor is yours.
Thanks, Michael. I think it's important as we go through this today, a couple housekeeping items, right? So one is everyone gets enamored with what's on the slides. We'll make the deck available to anybody that's out there. And then also we'll provide opportunities to get some feedback from you guys through questions or through the chat after I roll through a couple of slides. We'll also engage Ben and Brian to get their expertise and opinions about what's happening kind of real time in the dealership. But I think it's important, as Michael kind of said, to set the stage for what the market looked like prior to COVID, what COVID actually did, the residual impact of that, which is a word that I think we'll circle back to multiple times, the environment that we're in today, and then just practical things that dealers need to be thinking through if they want to be engaged with the pre-owned business. There is an opportunity that exists out there right now. And I will say there are a number of things that we're all kind of pushing against. There's macroeconomic headwinds, there's industry headwinds, but I think taking a practical approach to having a strong pre-owned strategy is a tried and true method for dealers to have success. It's a great revenue source within their dealership. And then the tentacles of that spread across all of the different departments within a dealership. So I hope to lay that out appropriately today. And again, we'll move through this quickly because I do want to get to the questions that are out there, as well as making sure we leverage the expertise that we have on the line with Brian and Ben. So let's talk about what happened prior to COVID. The marketplace as it exists specifically for fleet vehicles is around 5 to 600,000 units that are in operations, and that's stretched across roughly 16,000 courses or entities in the United States. The vast majority of that volume, as we know, is controlled by the big three. You'll hear me use that term generically, but Club Car, E-Z-GO, and Yamaha dominate that. They're about 95% of the fleet space. And so from a remarketing perspective, as those vehicles are ex-fleeted, what we see is that there's about 1,000 dealers, mostly franchise dealers, that were absorbing that inventory very effectively. And so they would buy it, they would retrade it, they would offer it as used inventory. There were avenues by which this inventory could be leveraged appropriately within dealerships. And so the larger market that exists, those 3 to 4,000 independents, retailers, and repair shops really didn't have a ton of access to this inventory. And the access that they did have was through this network of franchise dealers that were available there. But really what existed was a very stable market. We kind of understood these lease terms. We understood when inventory was rolling back through. Residuals were fairly easy to predict and set. And so we found ourselves in a very healthy, like harmonious alignment with the inventory that was available and out there, how that was digested and sold, and all of the stakeholders that were involved in that process. And so what COVID really did is it kind of disrupted all those things. One of the main things that we heard, and it doesn't matter what the industry was, is how supply chains were impacted. And so when supply chains got disrupted for everything from eggs to motorcycles to golf cars, that really shifted a number of things. One of the big things that it did for consumers is it shifted priority. Historically, we see these two lines in the way that consumers spend their money, right? And so you've got kind of these two general buckets that we look like with at goods and services. And so when opportunities to spend money dried up in the services industry, right? Taking cruises, going to movies, going on vacation, travel, a lot of consumers found themselves with excess time and excess money. And so a number of industries, the car industry, the recreational industry, and as a proxy to that, the golf car industry exploded because consumer demand exploded. Coincidentally, what also happened is the supply chain was disrupted. So the number of available cars shifted dramatically. And so we had this massive misalignment where prior to COVID, supply and demand were fairly stable. And we saw this huge surge in demand. And at the same point in time, all of a sudden, supply completely fell off the face of the earth. And so those two dynamics really did two major things. One, from an industry and dealer perspective, we saw pricing and margins all-time highs, shot absolutely through the roof. We also saw priority for dealers and for OEM shift towards consumer and commercial cars away from fleet. So what that did is the existing fleet that was available, we saw that pool dry up by about 70%. And we also saw that the average age of the fleet vehicles that were exiting because there was nothing to replace, that term, which had kind of been 36 to 48 months, shifted dramatically, right? And so we saw older, rougher cars coming out of fleet because there was nothing to replace them with. And so dealers had to adjust to that strategy and find ways to make money. And so dealers aggressively started sourcing inventory out of the scarcity factor, right? The fact that I don't know if I'm going to have access to cars. I've got more customers than I have cars to sell them. And so that created some habits where dealers were actively getting their hands on whatever inventory they could possibly source at that point in time. And so there were some avenues that were opened up, right? And so dealers who didn't traditionally source used or fleet vehicles, they aggressively went after that inventory. It also opened up an avenue for what we've seen recently here is an influx of overseas cars at cheaper price points, right? And so dealers did whatever they could to keep their dealerships full of inventory and meet the demand that was out there in the consumer marketplace. And so the residual impact of that, again, to use this term, is we saw value shoot through the roof. And the graph kind of illustrates that perfectly. The blue line represents wholesale values through auctions for 2021. And again, these are for 2 to 5 year old fleet vehicles that were in decent condition. And so at the peak of scarcity, and obviously the absolute trough of supply, we saw fleet vehicles doing upwards of $7,000 at a wholesale level because scarcity was such a big factor. Dealers did not have inventory to sell customers. And so anything that was available, we saw those values absolutely reach peak all time highs. Now, if you look where we are today, which are the green and orange lines for 24 and 25, we've seen roughly 24 months of kind of stable residual values back in that kind of less than 4,000, but really the marketplace exists kind of in a $2,000 to $2,500 range for what we would call typical fleet vehicles. And so we've seen this return back to normal. The problem is we were going through this process in 22 and 23. We had the aspect of supply returning, the fleet being much worse in overall condition than it was previously. At the same point in time, retail demand started to normalize. It's not that it got worse, but worse compared to what it was during COVID. And so we saw basically OEM inventories and dealer inventories swell simultaneously because all of a sudden supply was back. Everyone had new cars to get into dealerships. The consumer piece had tapered off and gone back to what we would call a more normal consumer demand. And the byproduct of that is too much inventory now in the channel, a complete opposite of where we were during COVID. And it wasn't just golf cart. It was the auto industry. It was motorcycling. It was RVs. It was boats. Basically every vehicle industry that was offering what I would call a discretional high value purchase went through this cycle in that period of time. And so golf cars kind of rode that wave of where we sit today. If you look, and I think this graph does a really good job of illustrating kind of where we were prior to COVID, the peak of scarcity in 21 and kind of where things sit today, what we find is that residual values are finally at a level where the dealers are starting to see opportunity in pre-owned again, right? But in order for dealers to do that, what we find is that the industry kind of has to go through a bit of a resetting of expectations, a resetting of what needs to happen with inventory and the process that supports moving this inventory into the dealer channel. And so structurally, there's some things that we need to do, right? And so when we talk about the reset of values, whether it's OEMs, whether it's dealers who are selling fleet, whether it's remarketing companies or finance companies, we need to be aligned on where the current marketplace exists for wholesale values and for the value of this excess of fleet cars that are now in the marketplace. Number two, we need to expand the dealer network, right? We talked about this bottleneck that exists both at the OEM and the dealer space. And so we still maintain that backbone of dealers of about 1,000 franchise dealers who are engaged, that are doing this business. But the reality is, with the amount of inventory that's in the pipeline today, we really need to engage a broader network of dealers. So that not only means stretching into other ancillary product lines like power sports dealers or RV dealers, but it also means engaging a lot of those used only guys, the DIYers, as my friend Brian Rott likes to say, to be engaged and involved in the remarketing of this pre-owned inventory. We also need to get back to predictable cycles of moving this inventory through the channel. And so there's this issue of, okay, well, how do we do that? Well, dealers need to understand the dynamics around pricing that exists today and understand that there's a significant opportunity for them to make money, but that requires that they invest in labor, they invest in parts, they invest in the process of what it means to be successful in the pre-owned business. And so there's been a number of OEM programs that are out there. There's been a number of dealers who have seen the opportunity that exists in pre-owned, right? And so from the manufacturer's perspective, they understand the inventory that's out there in the marketplace. And so they're working with dealers to try and find ways to create value, to differentiate product. And the reality is that we look at pre-owned as kind of a big bucket, but there's a number of segments. There's cars that are CPO or basically close to new, where a consumer can walk in and at a slightly lower price point as a new vehicle, they can get a close to new unit. There's units that are more budget friendly, that are basically fleet vehicles that need or require just a slight bit of refurbishment, but the consumer's looking for a price point that is much lower than a CPO or a brand new vehicle. And so these buckets exist, and it's important for dealers to understand that they need to have a very good finger on the pulse of their marketplace and their customer, understand the type of people that are walking in, and that will help you develop your strategy around the inventory that you source, whether or not you're involved in CPO or more value oriented cars, how much money you're investing in service and refurbishment. All of these things are strategies that need to be deployed, but there's an industry responsibility that we all have to help dealers in this mechanism, right? It's to give them the information they need. It's to provide them with the market trends and information. It's talking across dealerships to understand what's working in one market. How is this dealer successful? So leveraging 20 groups or friends in the industry in other markets to understand what the best SOPs are for managing and selling pre-owned vehicles. And so one of the things at NPA that we've always done over the years, whether it's been in power sports or in what we call the RVM, the RV and marine market, or here in golf car, is what we find is there's really 10 things that are extremely important for a dealer to understand around pre-owned and having success in pre-owned, right? Number one, I'm reminded of the scriptures when they asked Jesus, hey, what's the most important commandment that we need to understand? And number one for pre-owned is here. That's understanding that the money's made in the buy. And so that education process of understanding what you're buying, the quality of where you're getting it from, how much you're paying for it, that gives you an exit strategy for that vehicle. And so one of the things that's tied to number one here is have a plan for every single vehicle that enters your dealership. And then really 2 through 6 are around ownership. It's one thing to say, yeah, I sell pre-owned cars and there's 3 or 4 in the back, take a look. And if something catches your eye, let me know and I'll help you out with it. That's a completely different strategy than taking ownership of pre-owned in the dealership and making it a priority. One of the things that we tell dealers over and over again is treat it like an OEM. It's a profit center that exists in your dealership that you have a lot more control over. And we'll get into the control aspect here a little bit in a couple of slides. But the big thing is communicating to staff, to customers, to people who come to your website that you are engaged and focused on selling pre-owned vehicles. That message is important both in the store and out of the store to your customers. Understanding what your customers are, if I'm in a marketplace like Beverly Hills and I understand what people are looking for from a price point perspective, I'm going to source and offer a product that's completely different than if I live in Florida and my customers are mainly senior community people who are looking for something to get around in the area that they live in, right? And so that's dramatically going to alter my strategy around what I sell, the parts and accessories, the impacts on my service department, and the kind of margins that I can make on the vehicle. The last two are really around engaging and understanding what's happening. Like anything else, you really can't understand if you're successful unless you're tracking it and monitoring it. And so keeping your finger on what's happening with inventory, how long things are sitting in the dealership, the amount of money that you're investing in the cars that are coming into your store, these things are all tenement to making sure that you have success in pre-owned. And then, of course, the last one is promote, 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 and engage every part of the dealership into the pre-owned business. Understanding, how service agreements and then post-sale contracts can help you make more money. Having finance partners that understand how to properly finance and evaluate used sales in your store. These things are extremely important to being successful in pre-owned, and it doesn't matter what the segment is. All 10 of these things hold true, and we see the best operators in these segments managing these 10 things with every single unit that's in their stores. Another big thing that we push is velocity over margin, and the table below is just a quick illustration of how that can work. If you think of inventory as a capital investment, the more times that you can move and engage that capital, the more money that you can make off of it rather than holding for margin. A lot of times what we find is that dealers will source inventory and then sit on it for 6 months, 12 months, 18 months. The reality is that is a depreciating asset. And so the quicker you can turn that inventory, the more money you can make off of the original investment. And so this graph kind of illustrates exactly what we're talking about, where a dealer who may maintain a 60-day turn, which is aggressive, but a 60-day turn, you have the potential to turn that asset 6 times in a year. And so that margin potential, if we just look at a standard margin of around, 1250, if I move that vehicle 6 times, if I put that capital investment of 2,500 into play 6 times over the course of a year, my annualized return is 300% on that same capital. If you look at the extreme end of that, if we have a dealer who sits on the same inventory for a year, it's a depreciating asset. You have more inventory that's coming in. And so it's not only the cost of the number of turns, it's also what you could have done with that money over the course of that period of time. How many more times could you have turned that $2,500 rather than trying to hold for the $1,200 one time? And so that aspect of turn and velocity, it becomes a little bit difficult for dealers to understand, especially when they first start in this. But from our perspective, if you can master this piece, it gives you a leg up on most other folks because you understand how to manage your inventory appropriately. And then finally, I talked about this just a little bit as we were getting into it is control. The big thing that I find with dealers in pre-owned is that pre-owned gives dealers control over their inventory, control over their acquisition costs, control how they price, package, and market the inventory in their store, how it helps them control margins. Many times in OEM relationships, when we stock new cars, we have stocking requirements. You're required to carry 5 of these, 10 of those. You have to have this many colors of this. Dealers have complete control over the inventory they have in their stores, the price points that they offer, the mix and makes that are there. And so it allows you to tap into a broader customer base that you have complete control over. And the one thing I would like to hammer home, and this is, I use this term lightly, but it is 100% a hill that I'm willing to die on, is that pre-owned is a path to new unit sales. A lot of times there's confusion about, well, if I'm selling used, that's cannibalizing a potential new customer. The reality is that the new and used customer are completely different people. The new customer comes in, they want the latest and greatest. And so the price point is rarely an issue for a new customer. The customer that is searching for pre-owned, there's really two big buckets that those people fall into. One is a brand new customer, right? I talk about this. If I was buying a car for my 16-year-old daughter, we wouldn't walk into the BMW dealership and buy her a brand new 3 Series. We're going to go buy an older model that she can learn about. And so consumers that are new to an industry like golf car, they're going to want to test it. So in order for the industry to become a habit and then a lifestyle, there's an entry point that pre-owned allows for a broader audience of people. And that's a completely different customer than a mature customer who's looking for the latest and greatest with all of the accessories and options that new vehicles can provide. The other customer that typically falls into the pre-owned bucket is a value-oriented customer where their priority is value. And so that customer is easier to sell on a used vehicle than on a new. But what we find is that value-oriented customers, again, using the same customer trajectory, as I make this a lifestyle choice, the aspect for me to ladder up to the next model and to the next model, giving them that entry point in pre-owned shifts them from being a value-oriented customer to being a lifelong customer. And so for us, it is absolutely something that we've seen regardless of the marketplace, but pre-owned allows that access point for multiple people to get to new eventually. You will always have customers and there's no additional selling that's needed when they come in wanting to buy new. A new customer is not going to transition to a used one, but you can absolutely move a customer from used to new when they come into your stores. And then, of course, this piece ties into the entirety of the industry and kind of cycling this back through is that when we have good, strong pre-owned dealers who understand the value of cars and we get a stable marketplace, it supports residual values back into the network. And so we can understand what used cars are worth. They become more dependable and they allow dealers and OEMs to kind of move with more velocity through inventory much, much quicker. So, Michael, I know I went really quickly through a number of things, but I did want to kind of get through this piece. before we kick it back over to you, because we've got two industry experts in Ben and Brian that I'm sure a number of people want to hear from. So I'll let you take over from here and kind of take us into the next segment of the presentation.
Wow. Just wow. Tony, thank you. Holy cow, that was a very clear picture of how we got here, what's changed structurally, what's correcting now, and what the math looks like today. Two things that struck me, and I won't get deep into them because I know we have this great panel here, right? Don't fall in love with the scrap iron, number one. And number two, and I can attest to this, having made these mistakes throughout my career, there are different price points in the new and used car buyers are distinctly different. Having used, whether it's a shoe shine, whether it's a partial refurb, whether it's a total refurb, whether it's an import or a domestic, there's multiple price points that walk customers through the entire life cycle into the lifestyle. And as we continue to grow these markets, I think there's some really good opportunity. So with that, again, thank you, Tony. And what I want to do next is talk about what this means in practice for dealers making buying decisions, for OEMs thinking about channel health, and for partners trying to plan where to invest. And I think we even have an investment firm on board today in this call. So let's move forward from data to dialogue. Okay, so this is going to be a little bit of a surprise, guys. Sorry. I'm going to pose a few questions. You knew that. I'm going to pose them to the group and let you respond and build off one another. And because these are new questions that you may not have seen before, I'm not looking for polished answers here. Let's be real. I'm just looking for how each of you are actually thinking and how you feel in real time. Authenticity is a plus. So I'm going to direct this at a person on the panel, yet please bat this thing around and have fun. So, hey, Brian, being a dealer, listening to Tony's data and feeling both opportunity and risk, what is the single mindset shift you believe is the most critical heading into 2026?
Wow, thanks, Michael. And it's great to be here with everybody. That's a tough question because there's a lot of uncertainty, obviously, inside the industry with both manufacturers, dealers, suppliers, banks, and what have you. But what I can tell you, the single thing that comes to mind is optimism. I've never been more battered and bruised over the last few years with highs and lows of wins and losses, but now starting to finally normalize with the belief that the industry is stabilized. We may have likely hit what I probably would say skipping the bottom of what's been a really difficult year for some legacy dealers and distributors. It's been great for a lot of new operators that are new to the business, and in a lot of ways, they've come into it at the right time because, as Tony has been saying earlier, this type of vehicle, this product, is not just a toy anymore for families. It's become a tool in everyone's life, and then as we shift for the mindset of commercialized vehicles or fleet vehicles, it's always been a tool. And so um, the fact that we see a tremendous amount of optimism in our retail stores with our people, with our customers coming back to us, ready to make bigger purchasing decisions or making bigger investments in their own fleet. To me, that is the big is the big win and the big tell that I'm happy, about, and it gives us a lot of opportunity for everyone on the call and the thousands of dealers, authorized and not, to really make those investments in your businesses to start really growing over the next 3 to 5 years. That's when the real magic is going to happen inside the industry. What do you think, Ben?
Well, I agree, Brian, and thanks, Tony, for all your insight there. But I would say that the optimism is there. Used cars, there's a tremendous opportunity that's been coming through 25 here, and it's going to continue 26, get stronger. But that $5,000 to $7,000 price range has become very, it's a strategic piece within the dealership, very important. The margins are there. As Tony pointed out, it's along with new product sales, you've got to have the used car to fill the market's demand for certain type and prices of vehicles. So I think for every dealer, they need to really focus, especially here in 26, to look at filling that $5,000 to $7,000 range. And I'm going to say one little other piece. The refurbishment, there was big programs and there was some challenges with that from the dealer side. As we know, as dealers, you're on net 30 terms, maybe 60 in some cases, but you're buying body seats and all these components and stripping these cars and putting them back together. But if you go back 10 years ago, as the trend happened where golf car fleets were being rolled quicker, the cars were newer and the price started going up. And it culminated here in COVID, where the price, as Tony on his chart showed us, we all knew it, almost priced us out of any of that refurb business. It's now come back, maybe not in the same way, but it's come back to where we can take cars because the price structure's there that allow us to fill this void and call it $5,000 to $7,000. But to your point, Brian, I'm optimistic and I think it'll be a good 26.
Well, that's awesome. And I'm going to be Oz here behind the curtain, so I don't interrupt you guys other than to just ask questions. So the second question, and Ben, I'm going to toss this one at you. Tony made a strong case that velocity and return on capital, no matter, it matters more than maximizing gross profit on every unit. Where do you see dealers getting this wrong in practice? What's maybe some mistakes that you made going way back? And what's the first discipline dealers need to know to tighten up and make more money with used cars?
Yeah, so the first commandment there, money's in the buy, but you don't always buy right, or you take trades that you don't always get in right. That doesn't change the philosophy. Who sets the price? It's a fair market value. If you got 5,000 in it, but the market's 5,500, guess what? Merry Christmas. You made $500, but you better sell it for 5,500. You better turn around and make a deal where you're getting $3,500 purchases or 3,000 that you're selling. Maybe you put 1,000 in or the 1,250 or whatever it is, and you're making your 40% plus margins on those. But the market is set. So don't fall in love with the margin. Figure out where those vehicles sell and make sure you're playing within that box in order to turn that inventory. And occasionally on the new side, to be honest with you, we will misorder something that I don't know why it's not selling, but it's hitting terms on floor plans, etc. I sell it. And sometimes I lose 1,000 or 2,000 bucks. I'd just rather have the cash in my pocket. So it happens with used cars as well. Fair market value, and that's regional across the United States. It's different, different places, gas versus electric, etc. But know where that is. Be keenly aware where that is.
Awesome. Tony, do you have anything to add to that from your perspective on the auction side?
Yeah, I would say, the auction is one avenue to source inventory, right? And so Ben kind of talked about it, like understanding those market dynamics. When you take a trade, sometimes you have to be more aggressive on what you're giving on a trade because you want to get a deal done, right? And so the auction gives you a little more flexibility on what you're buying. Ultimately, you're competing for inventory at the auction level, and so you may want to buy a car at 4,500 bucks, but it may cost you 5 grand because the market demand is there. But there's also an argument on the other side of it that says if there's that many dealers competing for that type of inventory, that potentially this is better inventory or higher demand inventory that I may be able to sell for, instead of listing it at 55 or $6,000, maybe I can offer this thing at 65 or 7,500 bucks. But I think the underlying thing is there to have a diversified strategy. Make sure, however you're sourcing inventory, whether it's through the auction, whether it's through buying inventory from other dealers or distributors, whether it's taking trades, is to understand where you're comfortable with the inventory. Going back to Ben's point, the money's made in the buy. If you're in the vehicle right in day one, whether it's day 60 or day 365, you're going to be better positioned to break out of that inventory down the line. And so I think that strategy holds well, regardless of what your stocking and turn times may be, is understanding that all of the value is made in the upfront part of it. And then the other thing that I would throw out, and this is goes back into the comment Ben was making about just, the diversity of product you have in your dealership. If I have a stadium and I'm selling tickets to the stadium, I have tickets that cost $5,000. I have season ticket holders that pay $20,000 to have access to season tickets all year round, and I have seats up in the nosebleeds for 35 bucks. Every one of those customers is completely different from one another. And the hope is to take the folks that are sitting in the nosebleeds that come with their kids for the first time to get them eventually to be season ticket holders that show up every single week to watch our team play. And so that philosophy around inventory, offering diversified inventory to make what is a discretionary purchase into a habit, and then to use Brian's term, transition that to a lifestyle. We need to have diversified product at different price points to make sure we can attract the maximum number of customers. Those customers for those tickets are completely different, but we can move from the nosebleeds to the season ticket holders if we have the right product in our dealerships.
Hey, thanks a lot. And just a note here. So, hey, Jason and Alvin, I know you got your hands up. Can you do me a favor, please, and just type your question out into the Q&A, and we'll make sure we get to them. Let's move forward just real quickly here to the last question, and then we'll open it up for Q&A. Okay, guys, this one's a jump ball. So someone jump in and grab it. If we fast forward a year from now, December 2026, and you look back over your shoulder on this reset, what will clearly separate dealers who navigated it well from those who may have struggled? Let's say jump ball. Who wants to take it?
Mr. Rutt.
I think it's important. I think it's important for dealers right now to make investments in the company and the people within it. I think systems, process, technologies, understanding who you're working with at the OEM level and your supplier levels. You have to have strong relationships. There needs to be a tremendous amount of trust between your dealership and that supplier or OEM. I think those dealers who are going to expect and will have a good year next year will have open dialogues, regular communication with their OEM suppliers and partners. They'll have made bigger investments in their company, whether it be, again, technology, systems, process, or people. And always the human capital piece is the most important investment you can make. So training your everyone in your company to grow within our industry is absolutely mission critical. That means like technical training for your technicians, so that if we're talking about used cars, they actually know how to work and build used cars. That's actually a lost art that's slipping away as dealers have become less interested in breaking a sweat in building cars and instead selling something new out of the box. And that has been great for OEM manufacturers, but terrible on the used car side of their business. So we need to get people back to training and back to loving refurbishing cars again, or both the market won't rebound as fast as we think it could, and certainly the OEMs will be sitting on cars that they no longer need to hold. So it's all the investments in your own businesses and the relationships that are going to make 26 a big difference maker for everyone on in the industry on both sides.
Ben, how about you?
Well, and I would say this, if you look back, just the big picture is small businesses fail for two reasons: lack of capitalization, lack of execution. So assuming you've got your capacity to capitalize your business, the ability to execute, make a plan and put it in place and follow that plan is tremendous. The caveat is what Mr. Rock brought up too. And any dealer that if I was talking to any dealer anywhere, it can apply to a lot of different businesses, but your corporate culture is paramount. Culture eats strategy for lunch. For instance, I believe that a company that, like any dealership, um, have a real focus on employees, employee training, and confidence. Some companies may look at shareholder as number one, customer number two, and employees number three. I would argue it's probably this way because if you don't have happy employees, it's hard to have happy customers. And if you don't have happy customers, you're probably not going to have happy shareholders. They're not buying from you. So I think from a strategy standpoint and what people are investing back into their business, not only those principles, now that used car prices are in a place that they weren't 2 and 3 years ago, they dropped quickly. It's time and it's an opportunity for dealers to get back in the used car market and can do it well and make good money.
Tony, any last thoughts on this question before we open up the Q&A?
It's hard to add on to what Ben and Brian have thrown out there because I think they've addressed a good portion of it. The only thing that I would just kind of to layer on top of this a little bit is that, the dealership is the backbone of our industry. And so we, as an auction company, in an extension of that, OEMs, stakeholders in the industry, we need to understand that we need to help dealers become better business operators. And those things that Ben and Brian talked about, right? Reinvestment of the business, working with employees to have the best possible employees you can have in the dealership. Like those are industry level things that we need to support. We need to provide better education and training. So that way our dealers are the best operators in the business. And to leverage what Ben said, that will give them the best opportunity for overall industry health and success. If we have good dealers that are working and engaging with customers, regardless of what the problem is, too much supply, not enough supply, lack of liquidity, whatever it might be, if we have good operators, we can overcome whatever the next thing that gets thrown at us.
Perfect. Perfect. So, hey, thank you, gentlemen. Thank you very, very much for the great forum section. Now let's open it up for some Q&A. I'll be reading out some questions. And again, in the theory of the jump ball here, please somebody jump in and answer this question when I pose it, and then feel free to again, glom on each other and come up with some great answers for these questions. So, okay. So, first question is from Russell Gilbert, and I'll rephrase it here a little bit. What techniques do you use to promote a used car, one of the major brand used cars, when you're competing with an overseas car at a lower price?
Brian, you want to take that one? I know this is
Yeah.
a passionate one for you.
Well, I think the last part of the question is the most important. Techniques that don't disparage the overseas carts because it's off-putting to customers. And yeah, that's without a doubt a complicated approach. I think what's really important from a technique, what we push and encourage our sales teams to really understand the history of the vehicle that you're selling on your floor, whether it's a big three, and I don't just mean the history of their 65 plus years of business. Yes, that matters. Their supply chain, their commitment to excellence, safety, reliability, that translates into a very positive spin on what you're actually selling in front of them. But I think the history of the actual vehicle, we understand this car, Mr. Customer, to have had 2 years on a private golf course, with very low mileage. When we got our hands on it, it was a certified pre-owned, which means it came with all factory components replaced that are really major hot points. Whatever the is that you're selling, you have to tell the honest story. If you're selling a car that's been salvaged from a hurricane, and you're avoiding that, then you're not doing yourself or the customer any favors in building trust and value. I think telling an honest story about what you're selling and who you are as a company and who the company is that built that car is about all you need to sell against the competition, whether it be one of the other major brands or whether it be an import brand. So transparency with your customer is mission critical. I'm sure that comes natural to most, but not to everyone. And that's what we're hoping to, get people engaged in and learning with the Low Speed Vehicle Dealer Association is how to really do things better and through our best practice sharing. So it's a great question and also difficult to apply to many salespeople on the floor.
Yeah, that was a great answer and pretty thorough. So let me jump to the next question. And I thought somebody was asking me my age here, but I'm going to reflect back when I moved from Boca Raton to Augusta, Georgia to manage used cars service and leasing for Club Car. And we had maybe we were up to about 6,000 units a year, and we had 1,000 used cars in the lot, 12 different brands as I remember, like Doobie Clark, American Continental, Westinghouses, Harley Davidsons, Pargos. Oh my goodness. And I'm like, what the heck am I going to do with these? So, Ben, this one comes to you as the master rebuilder. How old of a chassis is still sellable in the refurb market? And this comes from an anonymous attendee.
That is a good question. I would say there's a couple of elements that I would look at. Uh, Safety, number one. In other words, is that vehicle, can it be put back together with the appropriate parts, with the appropriately trained people? That's number one. Number two, is there in fact a part supply available for it? I would offer you this. Imports have done a great job over the last several years selling a lot of cars. They have actually done the market a favor by doing some things that probably Club Car and E-Z-GO and Yamaha should have been doing already. However, their history and their ability to have parts and things and stability around is significant. That being said, we will get an opportunity to trade in a 5-year-old vehicle that was imported from somewhere that I really don't recognize, that I would never in 100 years ever sell it to somebody. So I can't give you anything for it. So as far as age, it's going to depend on, I think you're going to go back to safety features and serviceability long term. That could be a 10-year-old car, it could be a 15-year-old car, but I don't think, my dad started with Harley Davidson in 19, or actually Westinghouse, 1974. I drive a 1971 Harley at my house. It's refurbished, so I'm comfortable with it, but it may not be something that I sell to people around. So short answer is make sure it's safe, whatever you do.
Perfect. Perfect. So I'm going to throw this out as a toss-up here. What are the current trends in the golf car industry, and how do the trends impact inventory selection and pricing strategies at auctions? Before somebody jumps in on this, I'll just say that we've got some recent research from one of our sponsored partners, Power Products Marketing. And I would say this, as a trend going into 26, 27, and 28, if we look forward on a forward CAGR, what we're predicting is that fleet golf will be relatively flat to low single digit in terms of a category. Commercial market, mid-single digit, maybe a skosh more of annual growth. And on the consumer side, as this lifestyle explosion occurs throughout neighborhoods across the United States, we're still seeing in the retail consumer space high single digit, maybe even crawling into double digit growth. So, kind of a trend looking forward on the market size. Now, let's go back to how do you see the trends impacting inventory selection? Who would like to take that one?
I don't mind jumping in, Michael, since we've got some feedback from Brian and Ben here. Yeah, so obviously, when we have more inventory available, that's going to have an impact on the number of units and then ultimately the price that we see in the marketplace. The other side of that is kind of that engagement thing that I talked a little bit about in the presentation is the responsibility to engage as many dealers as possible, right? The more competition that we have for used cars, regardless of what the influx looks like, the more bids and obviously the higher values. That's a very simple math equation that we use. And so we try to evaluate the number of necessary bidders that we need for any given pool of inventory very systematically. Algorithmically, I guess, is the better way to say it, where we look at the influx and what the inventory looks like. And then we look back historically. What are the dealer characteristics of people that have participated in the past? What are the likely outcomes for pricing based off of the influx of inventory, not only the volume, but the characteristics of those units. So I think if we circle back to what we're looking at right now, we've got a high volume of cars kind of in that what I would call late model bucket. And so I would expect that values and trends here, at least in the short term, to be fairly stable. We're heading into what I would call like the selling season for most dealers. Right now it's winter in many parts of the country, and so it makes the business difficult. But if I was to project seasonally what will be happening with values, I anticipate that values will hit their peak kind of in March, April, May of this year. And so for dealers that are sourcing now, it gives them the opportunity to A, have a little bit of a price advantage because we typically see softer values in November and December during winter, and then gives them time to source and also refurbish product. We talked about the fact that some of this inventory has been in fleet for an extended period of time or has had higher use than normal. And so dealers can focus on those avenues and having retail inventory available. So, as we see that quality and characteristic of vehicle change, right? We get back to a more normal flow where the example that Brian gave, we see more units that are coming back off of a 36-month lease with low mileage that have been maintained very, very well versus what we're currently seeing, a more used, typically a unit that needs more refurbishment. I would guess that values would shift upward as the quality of inventory changes. So I don't know if I directly answered the question, but strategically, great time to buy, great time to work on refurbishing. I do expect values to increase as we get into spring. And then the other part of it is as that mix of inventory gets cleaner and nicer, I expect ASPs to get dragged up because the cars are just better cars.
Okay, thank you. So here I'm learning something. Well, actually, I learned a lot today. Um, the main thing I learned is we have a heck of an engaged audience, and we've got more questions than we have time. So I'll just commit that everyone that signed up will get a written response to the questions we haven't answered. And I apologize that we didn't get to everybody. My bad. We need more time for Q&A going forward. But Tony, here's the lightning round. Okay.
Okay.
You
Quick
get
answer.
20 seconds for each answer, and then
Okay.
we got to move forward and close. So, where are these golf car auctions that you keep referring to? Where are they?
So you can find us at npauctions.com. Registry, if you're an LSVDA dealer, there'll be a slide in here. We're giving you free membership for a year to check it out, to learn, but go to npauctions.com. We have 12 locations throughout the United States, and we're selling inventory from all 12 of those locations. So regardless of if you're in Florida, California, New York, we should have inventory in your backyard that you can access. But you'll find the majority of information you need to engage in these auctions at npauctions.com.
Okay, another 20 seconds. Lightning round. What resources or tools do you have for dealers who are looking to optimize their auction strategies?
I guess I'll field it again. Valuations, trend data, and then we are working actively with Michael and Brian and the folks at the LSVDA on education, right? Seminars like this where we can take big, complicated information, make it digestible, and then share it to the network of dealers that are interested.
Great. And I'm going to take one for 10 seconds. An anonymous question here. With the overseas golf cars and LSVs, do we feel there's a threat in the market? No. There's no threat. The market is growing fast enough that there's plenty of food on the table for everyone. No one's going hungry in this market. We've got plenty of opportunity. Okay. So, hey guys, thank you. Thank you. And let's before we wrap up, I'm going to just take a moment here to talk about LSVDA. Everything we do is organized around three core pillars, and you see them here. Next slide, please, just to speed up. You'll see a QR code on the screen. Scan it to learn more and join. We'd love to have you as part of what we're building. While you're scanning and joining, we're focused on policy and safety. That means helping the industry stay ahead of regulatory, safety, and compliance issues. Surprises aren't good. We don't want you to be surprised. Dealer performance and profitability, education, best practices, peer insights that help dealers better run the businesses, pricing, inventory, service. Clearly today, we covered some of that material. And market growth, expanding awareness, use cases, and demand for golf cars and LSVs, no matter the market, so the market grows, not just shifting in market share. I hope today's session was valuable to you, and that's dealer performance and profitability pillar in action. Again, fewer surprises, better decisions, and healthier industries. Let's move forward. Before we close, here's a QR code to activate your NPA offer. Tony, can you hop in here for a moment?
Yeah, I mentioned it. Go to npauctions.com or scan the QR code if you're looking to find out more information about the auctions, if you're looking to get signed up. I mentioned it already. We're extending free membership to LSVDA member dealers. We want to help the industry, we want to help dealers. And like we talked about, there's an opportunity in pre-owned that exists today, whether you're sourcing from us or other folks. Leverage all these tools, engage with us. We've got 15 field sales reps, and we've got probably another 50 or 60 internal folks, whether it's through marketing or ISRs. And so all of these avenues and folks are available to you, and all you need to do is scan this QR.
Hey, I'm going off script, but that doesn't surprise you, does it?
Not at all.
With 2.5 minutes to go, let me field another question here. With current surplus of used cars, what opportunities do you see for dealers to leverage rentals as a way to move forward?
Oh, I'd like to hand this one. You know, rentals has always been a gateway to the industry for a lot of dealerships in the years past. It provides a strong revenue stream when you have a solid fleet or a customer base that you can count on. There's two types of rentals. There's direct to consumer rentals and obviously direct to business, i.e. golf courses, special events or other types of commercial businesses. And it's a fantastic entry point into the industry through the rental piece. There's not only options for new dealers or new operators who want to get in there, but there's also technologies that are coming up now and again that are starting to make the process of renting direct to consumer or business easier and faster. And these are all types of products and services that you can get linked up, obviously through the association. If you're not a member, this is one of the reasons to join. We can teach you that.
Beautiful, beautiful. Thank you, Brian. And with 1.5 minutes to go, I would just say I want to sincerely thank Brian, Tony, and Ben for sharing their time, their perspective, and their very broad and deep experiences today. And thank you to everyone who joined us. I believe we might have a brief survey that'll pop up automatically when we sign off. Your feedback will help us shape future sessions like this. Again, we will answer in writing the 4 questions we didn't get to. We did get to the rest of them. And this webinar kicked off a broader educational effort between LSVDA and NPA. We're excited for what's ahead in 2026. Again, thanks for being with us here today and have a great rest of your day. Thanks, everyone, and we'll see you soon.